Let's go.
And all right, you're ready to go. Go ahead.
Is it live?
Yes.
Okay, great. So, hey everybody, this is Alex with Green Palm Realty. I've got Susan Lascano here with Fairway Independent Mortgage Corporation, and we just wanted to talk to you a little bit about the loan process. Not a typical interview about what buyers need to know, but more geared towards loan originators and realtors alike. We just have a few questions. I'll first let Susan introduce herself.
Hi, I'm Susan Lascano with Fairway Independent Mortgage.
And so the questions that we have are kind of geared towards the issues that sometimes arise between mortgage originators and realtors. So first we could kind of start off with just what a pre-approval letter is compared to a conditional loan approval, and how that really sets the stage as to the issues that we're going to talk about here in a minute, and of course how we can avoid those. So okay, so if you can just explain that, just the simple difference between the pre-approval and the conditional loan approval.
We have a pre-qualification, and we send out a pre-qualification letter to realtors to let them know that we've discussed certain things with the customer, like their credit and assets and income, right. But we really haven't seen any documentation to solidify this. So when we do a pre-approval, we actually collect the conditions, send it to an underwriter, and get what's called a TBD, to be determined property. So that way they're fully approved up front, and we have no issues towards the end.
Right, okay, so then this is with all the conditions met.
Absolutely.
So any kind of W-2s that are missing, just simple documentation, right?
Simple documentation.
So that's obviously going to be the best way to start the process, but we know that's not typically what happens, and a lot of times you're forced or really edged on by the realtor to get a pre-approval because the buyer doesn't want to
pre-qualification.
Or pre-qualification, right?
Absolutely.
So that's what we're used to seeing. And that's typically what it happens. Then we go under contract, and the loan process is formally started.
Right.
And then everything gets analyzed and then pushed, I guess, to your processor. And in your case, you do a little bit more upfront legwork to get that processor set up correctly. But some people don't. So and of course we've been in this experience as well. So what our things that we want to ask mortgage professionals is the transparency factor. Whenever we're working with a seller, we like to know how that process is going, and we've all agreed in our contract up front to allow that communication to happen between sellers agents, and buyers agents. So I guess what would be a reason that a processor or a loan originator would not express issues during that process?
There's a lot of factors. A good loan officer, a loan originator that has been doing it for a while knows the guidelines and knows how to ask a lot of important questions and collect information up front, right, to make sure there's a fallout. But the reason that they don't do it is a few factors. One, they're afraid of confrontation with the agent. Like they're afraid that this is going to blow up and they're going to get mad. And another one is that they really don't know. Sometimes they're not told by the underwriting, or it may be a process that they're not involved in. They have handed it off and they really don't know. Okay. And that's really and mostly they don't want to alarm the realtors because they're afraid that the contract is they're trying to solve issues in the background and they're not being transparent with the realtor. Right.
And so they're worried that realtors will be jerky. Mm-hmm.
Absolutely.
A little overly emotional, and in some cases they might even try and shift that loan to another loan company.
Absolutely.
In the middle of the process, and they don't want that to happen. But we do see that at times they're not, there is no transparency, and that could cause a seller to, of course, not be as cooperative when necessary. So what do you guys do that's a little different? Do you with the conditions, when the conditions are noted?
Well, one of the things that we do when the conditional approval comes out, we make sure that we get all the conditions. And something we can do is, if we ask the customer, we're actually allowed to send the conditional approval to the selling agent, so they can see that they're conditionally approved.
Right, and what those conditions are.
Exactly.
So it's nothing, that way if it's a simple W-2 that needs to be turned in, or
right,
a letter from a relative, it's not that big of a deal. Where if it's like we've experienced, maybe DD-214 that was never available, things like that. they could be at least, upfront about it, not finding out the day or two before closing.
Well, one of the things that I do, if I have a VA customer, I know that one of the things that can happen is they may have had a foreclosure or short sale on a VA before, and that limits to them what they can get. So I get the DD-214, send it off to my assistant who pulls up from the VA, and we know exactly what they get the certificate of eligibility.
Right.
That's some of the stuff, being in the business so long, that I know to go ahead and do. We kind of think like underwriters and make sure that there's no fallout. I have no fallout, because we do all that up front.
Legwork, no kidding.
All the legwork.
All right. So I know there's a lot of new realtors out there. I don't know the math on it, but I think half the realtors are, new within just a couple of years. So can you give an example of what goes on from the loan origination process through processing? What are the things that they need to know are happening behind the scenes?
For 18 years. A customer comes in, and as a loan officer, what we do is we take all of the information that they supply. And, we have a saying in the industry that, buyers may not be upfront and honest, but that's not true. It's just that they really don't know,
Right.
You ask them information about their pay and how much they have, and most people really don't know the nitty-gritty into their finances, and that's where we get involved. We really take a really good application. That's key for a good loan officer. A good 1003, an application from beginning to end. Ask questions. If they have other properties, who's on the deed, all that kind of information up front. Then collect as much documentation to back that up.
Right.
Then once we get collected information, we do have a due process. We have to go by. That's come out with the Dodd-Frank stuff and the TRID. So we do have to get the intent to proceed from the customer. We usually do that electronically. Send out disclosures, loan estimate. Send the file to the underwriter. At the same time, order appraisal, order title, all that information.
And when does the appraisal get ordered?
Typically, the lender will order it right away. There's occasions where I may not order it right away because we're waiting for the approval because we don't want to waste I don't want to waste the customer's money. So I do an executive decision there. But usually, the moment that we put the file in, we order the appraisal.
Okay, so before the 10-day inspection period, as long as the buyer's obviously okay with it.
As long as the buyer's okay with it, they know about it up front.
Okay.
They usually pay for their own appraisal.
So that helps tremendously with time frames. And then, of course, when you get your conditions back from the underwriter, you will share those if the sellers ask for it.
It's not customary. We don't usually send that information right up front, but if the buying agent asks us for it,
right.
we have to go to the buyer and say, hey, it's okay to sell it. If they send it to the selling agent, and if they say yes,
then you guys do it. Okay.
Yeah, and that way you'll see exactly what
what issues are coming.
What issues are coming.
Now, so typically you guys. What is it, 3 days before closing, you need to have certain documents signed, right? You really need to have a clear to close 3 days before closing.
Very interesting. Some lenders do it when they get the final clear to close. They wait till the very end to send the CD, and then we have a 3-day waiting period. At Fairway, we send it when we put it in and get the first approval. So that way, we have the disclosures because we already have everything. We get everything up front.
Okay.
So once the CD goes out, we wait our period, and then it gives it times for the title company and the closing department to balance out.
Gotcha.
Unless there's any changes of circumstance, which usually does not happen after you get the approval, it's done.
Right.
Then we would send them a new loan estimate.
Okay, interesting. I don't know if you guys have any questions. I know we've just started doing these interviews, and we'll be doing them more often. So gather your questions together. Again, if you're a new realtor or you're new in the mortgage industry, we'd love to hear from you, hear exactly what your thoughts are on this. I mean, if you're experienced as well, it's probably more important. But if you have any questions for us when we do these again, let us know. You can let us know now in the comments or anytime after. We're going to be doing this again probably in a week or two. We'll do another one where it's just the loan process, something more for the buyers out there to let them know up front what's necessary when they're getting a loan or buying a house. And of course, I really want to get into some really deep questions and deep conversation about the relationships that buyers agents, sellers agents, and loan originators have. So I think we'll do a little more of that in the
Sounds
next
good.
go around. Maybe we'll do it with beer. We usually get a little more upfront when we have some beers like we did the other week.
Absolutely.
So so that'll be good. Anyways, it was good seeing you guys. We're gonna go to end this one now, and we'll see you next time.